All right, guys, this is Paul Singh, the Market Speculator with bullsonwallstreet.com. The question of the day is the market ready to pull back? And we've got some indications of weakness here we're going to talk about and some key levels to watch. Now, the market has pulled back a little bit from 240 all-time highs. Basically, every day through here was an all-time high and pulling back to the 9 EMA. Now, this is not giving us our indication yet. This is just a regular healthy pullback right to a key level. And we're going to watch this level very closely before even looking under the hood, which we're going to do in a second here. We want to see how the market reacts to this pullback of the open gap and the 9 EMA. Now, that's on a surface level. Let's look a little deeper. And the first thing we're going to notice is the IWM, which is a broader based index here, had been keeping pace with SPY, and that's what we want to see. When SPY is moving, we want to see IWM moving. That means the mid caps and smaller caps are also moving. And IWM has been lagging the market. It didn't quite make the all-time highs that SPY was making through this period. And when it pulled back here, instead of holding the 9, which SPY is at right now, it's already testing its 50-day moving average. So that's a sign of weakness. Relative weakness has not been showing relative strength compared to SPY. And that's a concern for the market because we want to see a broad-based rally, which we were seeing more of through January, February. Now, the other key indicator we watch for signs of weakness is the T2108 on TC2000. Now, different platforms have different ways they do this. On TC2000, they measure stocks that are above their 40-day moving averages. And what we're seeing here is relative weakness. We are testing a level that we saw in February and all the way back in November. Now, if we pull up SPY here, SPY is at all-time highs. So you would think if SPY is at all-time highs, we should see the T2108 at all-time highs as well. Instead, we're seeing the T2108 at levels we saw back here when SPY was down at 230. That's what we call a negative divergence. If the market is running, we should be seeing more stocks. It makes common sense. We should be see more stocks doing well. And what this is telling us is the market is narrowing. Not enough stocks are participating here. That's a concern. So I would watch the T2108 very closely and see if it stays around 48 or 50, then we're okay. If this starts to dive, you can expect the market to dive as well. So we're not making any big prediction right now on the market. What I've told trade report members is to be patient right now. Don't make any big plays in either direction, and let's let the market tell us what to do. But we do have a couple of key indicators here telling us that we could expect a pullback, and if we did, I would watch this 230 area very closely, which is a 50-day moving average, and the old all-time high, which isn't so old, it just happened a little while ago. So even if the market pulled back here, it's still healthy. Unless it breaks a 50-day, the market is still chugging along good. In any strong market, you get these types of pullbacks when we get to these overextended levels. So keep an eye on that, be patient, wait for the clues, and whatever the clue is, then you get aggressive and are ready to pounce. When that happens, we'll get back here and talk about exactly what to do.